The CPI report came in this morning as expected at 2.7%. And this does actually mark the second consecutive time that inflation has actually risen on a month-over-month basis. So what we do see is we see the year-over-year inflation rate again at 2.7%. And although that is not nearly as scary as it once was, up around 8% plus, it's still coming off of its lows around 2.3%. That being said, when we take a look at the inflation statistic today, how did the markets react? Well, it's pretty clear that the stock market is definitely okay with this number here. NASDAQ is currently up at the time of recording this 1.3% on the day. The S&P 500 also seeing about a 0.6% gain on the day. Dow Jones is flat, held lower today by healthcare, which I can show you just really quick. If I take a look at XLV, which is an ETF that tracks a conglomerate of healthcare stocks, you can see we're down 1% as a sector there, which is again holding down the Dow Jones, which does have some pretty heavy names. For example, UNH, which is really dragging the Dow stocks down. United Health Group, which many of you guys probably have seen some of the drama recently with the individual, the executive, who has unfortunately made headlines recently. So let's take a moment here to reflect on why the stock market is actually up on this number today. So prior to this morning's number coming out, the expectations for a rate cut were somewhere in the 80% range. So it's like 85 to 15% chance that we would in fact see a rate cut in the upcoming 18th of December meeting. What happened today is the probability shot up to about a 96% chance, basically locking in, now that we've seen the NFP report and the CPI report, that there does seem to be, according to the market, adequate proof that the Fed has what it needs in order to cut interest rates in the upcoming Federal Reserve meeting. So that increased probability has the stock market a little bit excited, and although the 2.7% inflation does show signs of inflation rising, on an overall basis, inflation still seems to be trending down in aggregate. And I think there was also some concerns that there was the possibility that we would get something like a 2.8 or a 3% rating on the year-over-year CPI number. So I think some of those fears were squashed today, bringing them down just to the forecasted 2.7% year-over-year number, which has the market at least sighing a sigh of relief. By the way, the tool that I'm using to take a look at all this economic data is called the Edge Finder. And if you don't already have the Edge Finder and you'd like to try it out for 30 days, there's a link down below in the description to apply for a application on our website. Within the Edge Finder, you can take a look at seasonality data, you can take a look at labor statistics, inflation data, and of course, all of our different sentiment indicators, which are very popular, like the commitment of traders data, the retail sentiment data, the put-call ratio, investor sentiment surveys. We have a little bit of everything all in one singular platform. And if you're a data kind of person, the Edge Finder might be the right tool that you're looking for. So try it for 30 days. Use the link in the description down below. There's other charts on the move here today. The gold chart is up to 27.13 and tapping on the door here, knocking on the door of that level of resistance we keep talking about. If we can get a nice breakout and retest, this is a possible trade idea for me, most likely going into the next few weeks. I do like the idea of having some gold exposure, but I've been waiting for this technical breakout and it looks like it might be coming soon. So again, what I'd be looking for here specifically would be some sort of a break above structure, some level of breakout here that just really clears this previous level, and then looking for any sort of possible retest opportunities to look to go long in the direction of the dominant trend that we've seen in 2024. And the risk on rally continues with Bitcoin. Bitcoin up 3.75% here at the time of recording this video. And we do see, again, some nice gains off of this CPI report. The 2.7%, again, although it wasn't, inflation going down per se, it still wasn't inflation going up, which I kind of alluded to in the live stream today, that the overall theme here has been risk on, and there's a party going on for risk assets. And so today's number, not turning off the music, if you will, allows the party to continue to roar on. Until further notice, risk assets seem to be on top. S&P 500, NASDAQ, Bitcoin, Ethereum, everything that has a risk premium attached to it seems to be be trending higher. And that makes me a little bit cautious. Personally, I've mentioned in recent videos my cautionary tale on some of these, assets that have been up and away. Not to say necessarily that I think that they're going to come crashing down quickly or anything like that, but when something comes along to scare the market a little bit, I don't want to be on the same side of the boat as everybody else. So I do think that there is likely some pullbacks coming at some point, and those pullbacks could be made a little more sharp simply because everybody seems to be very bullish right now on the market. The dollar index is slightly higher today, and you can see seemingly finding support around that 106 level, but I'm curious to see if we can go back and test those highs, but more importantly, if we actually can break out of that 107.5 level and see if the dollar strength does indeed continue. On a bearish note, if you do see, the Fed come in with some commentary that is more dovish, then perhaps we do see the break to the downside. But right now, dollar index for the short term doesn't seem to have a ton of catalysts one way or the other. Again, with CPI report behind us and the NFP report behind us, what really is up next is the Fed meeting. I have a trade on the dollar yen that's not going too hot, but this is a bit of a hedge to my risk on general perspective in the market right now, but not seemingly working out too well on that front. We take a look at a lot of the dollar crosses, however, and the dollar is quite strong. So you see Euro USD looking really bearish. This chart looks really, really tired for bulls. And then if we take a look at pound dollar, similar story, Kiwi dollar. I mean, the dollar strength seems really, really pretty prevailing across most other currencies. And again, you may be wondering, if you're a currency trader or a gold trader or even an index trader who watches the dollar index, what changes this? What gets this thing to crack and roll over? Well, it'd likely be either some strength from other currencies coming into the picture or weakness from the dollar itself. Now, what I mean by that is that if you get other central banks whose economies seem to pick up in pace and the expectations for cuts or interest rate cuts in those other places diminishes, their currencies could strengthen, which could on a relative basis bring the dollar down. But the other story would of course be if you see some cracks in the US economy. But right now, that does not seem to be the story. Recently, we've had, again, I've mentioned a little bit, the overall economic data in the United States has been relatively upbeat. Jobs data has been pretty strong. We did have a beat in the NFP report recently, and with inflation staying steady, especially when we compare it to some of its peers, right? Take a look at the UK. Look at inflation here. It's at 2.3%. At one point, it was at 1.7%. My point was showing you that inflation oftentimes is a key indicator that central banks will use to decide whether or not they're going to raise or cut interest rates. And for the beginners out there, raising interest rates is typically bullish for a currency, and cutting interest rates is typically bearish. And they make their decision based on what the labor data is looking like, as well as the inflation reports. So inflation in other places seems to be falling further and faster than the US, which is making the dollar look more likely to see rates stay higher for longer relative to its currency peers, making the dollar look strong. So at a high level, for the dollar index to really crack and go bearish and give gold and other charts the opportunity to really rally, you need to look for some cracks in the economic data or inflation story, and we just did not get that with the inflation report today. So overall, the dollar still looks relatively strong in my view until further notice, but we'll continue to monitor on this channel. And by the way, if you're someone who watches this channel from outside of the US, I got to tell you about today's video sponsor. It is Vantage. Vantage Markets allows traders to trade everything on one singular brokerage, whether you want to trade CFDs or currency pairs, cryptocurrencies, etc. All of that can be done within their platform. They also offer very low trading costs. They have a copy trading service available, and there's a generous welcome bonus available to my subscribers. So if you'd like to check out Vantage and see if they're a right fit for you and your brokerage needs, check the link down below in the description to take advantage of that welcome bonus. Today's CPI report also threw some people off. People oftentimes wonder, Nick, why is it that a big red folder event like CPI can sometimes not really have a huge impact on the markets? Well, I covered that in today's live stream, and I wanted to play that clip for you in case that too is confusing to you. Check this out. But a big CPI report today should not scare you. It should not, you shouldn't be trying to guess what's going to happen here. You're treating it absolutely like a gambling game in a casino, and you're going to lose your money over time. The reason I say that is because if a big news event scares you, your position sizing is way too big. You're treating it like a gamble. What we do here on this show, on these streams where we react to big numbers like this, is we interpret them and we trade the aftermath. We don't go gambling right ahead. I'm not over here. You're not going to see me ever on these streams taking a giant position on gold with minutes to go before a CPI report, fingers crossed, one eye open, one eye closed, hoping that I get the direction right, because that doesn't build sustainable trading. That will make it so that a year from now you're no longer trading and you're like, I lost a bunch of money doing that. That's a scam. That's how those people get born. Don't be one of them. If you want to trade the markets profitably over the long term, these sorts of events can't kill you or make you, right? They have to be treated with responsibility. So how do we do that? Well, we look at what the number actually tells us. If you get an inflation report that's really cool today, and the Fed might get the excuse to actually start cutting rates more next year, and we might see over the next few days, weeks, or even months, perhaps a gold bullish trend start to form off of cooling inflation data. Like we have, by the way, for the last year or so. Inflation has been cooling, not just in the US, but we can look at this data. We can understand this. Let's actually apply some logic to this rather than just what 95% of traders do, which is just trade the spike and call it, a sort of a roulette game, right? We're not doing that here. What we do here is we look at what this data is actually telling us. Inflation's falling in the United States. Is that trend going to be disrupted today by perhaps rising inflation, or are we going to see more of the same? More of the same, by the way, means that the trends that have been in place for things like gold, right, could continue. So we look at that and we say, okay, if inflation is hospitable today, if inflation is cooling off and not giving us a big problem, then this gold bullish signal that we have on the Edge Finder, inflation readings are probably going to remain relatively comfortable. But if we get something that changes up the story, higher than expected inflation, that changes the story for gold. Are we on the same page? Again, a lot of times we get people in the comment section. You're going to see them right now. There's people who say gold buys or NASDAQ sells or whatever. Nobody knows what's going to happen in the CPI report. And those comments that you're going to see on social media are going to get you into a lot of trouble because nobody knows what's going to happen. Nobody knows what the inflation statistic is going to be perfectly ahead of time. What we can do as traders, however, is we can trade the momentum or the story that unfolds once those numbers start to come out. And I'm not scalping that number. I'm looking at possible swing trades. I'm looking at possibly intraday trades, although that's not really something I do too much. But certainly there's a lot of people who do use CPI reports and on an intraday level, but they're trading responsibly and managing the risk. Thanks for watching this video. And on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.